Well, as everyone here knows, this month is the 10-year anniversary of the famous white paper, and the title of this panel is, is institutionalization of Bitcoin, is institutionalization of crypto compatible with Satoshi's vision, and does that even matter? So I just wanted to open it up with that. I wanted to, start with Linda, perhaps, and what is your take on that? And does it even matter if it's compatible with that original vision 10 years ago?
Yeah, I think the point about the vision is that it changes, so we can't really look back at what, the reason why Satoshi wrote the white paper 10 years ago was because of the financial crisis. So, that they had their problems at the time. He wanted to create something that was peer-to-peer, trustless, and takes the kind of dependency out of the intermediaries. But that was the dream to Satoshi's vision. But what since has happened is that what was meant to be a fast, easy to access cryptocurrency that was Bitcoin is not as easy to access as was dreamt of. So now, institutional firms, which is basically another word for, companies whose job it is to make financial services access easier, is trying to step in and basically solve some of these problems created by these crypto assets, which are great to have peer-to-peer, but it's still very difficult to access, given how technical it is for people to access it.
Got it.
Yeah.
Well, then I wanted to ask, Andrew, what your take on this is as well. I mean, there have been plenty of great inventions that started off with one purpose and then they proved to be, world-changing for another. Maybe this isn't the best example, but Viagra, for example, was originally a blood pressure medication. It turned out to be $1 billion product elsewhere. But what is your sense? In terms of institutionalization?
Yeah, I think that Satoshi's original goal, it doesn't matter, right? At Coinbase, we're a very mission-driven company. Our mission is to create an open financial system for the world. So that's kind of at the center of everything we do. And it might sound as though I'm speaking out of both sides of my mouth because I represent the institutional business. But internally, we like to think about things in two phases, right? The investment phase and the utility phase. Right now, probably we would say 90% of the activity you see is in the investment phase, which is coming from institutions and being driven by institutions. However, about 10% of that is still kind of utility, so using it for payments and kind of real-world use cases. We think that kind of as we go through time, it'll kind of shift the other way, where it'll be 90-10. And it's still anyone's guess if that's 2 years, 5 years, 10 years away. But that's the way that we kind of think about the balance and kind of how we try to bring our products to our customers and to our clients. At Coinbase, at least, we're a crypto-first company, regardless of what else we do in institutional business, but we're really crypto-first. And what that means is that it's our duty, it's our responsibility to find the best technology and solutions out there to help foster and develop them, and to bring them to the hands of as many people as we can globally. And that's everything, from identity on the blockchain to stable coins to decentralized exchanges to whatever it may be.
Is that how you see it, Katsu? Is it similar perspective there?
Yeah, so the beauty of the cryptocurrency is the decentralization and the borderless. Right? And so when the Satoshi created the Bitcoin, he knew that, and also he thought the cryptocurrency, the Bitcoin, will be the mainstream in the financial industry. So in that sense, the liquidity is the most important thing in the financial world. So the who can provide liquidity? That is the institution. No, the leader cannot provide a large liquidity to stabilize the market and the financial world. So that's why the institutionalization is very in line with what Satoshi said.
And I wanted to drill down a little bit more into institutionalization. You talked a little bit earlier, Andrew, about the kind of the segmentation, but when we talk about institutional trading so far, are we talking, we're talking hedge funds, we're talking specialized hedge funds, we're talking family offices, but I just wondered if maybe you and Linda could maybe offer a little bit of nuance in terms of how that percentage breaks down.
So I think percentage-wise, the kind of institutional clients that we're talking about exist in kind of different segments. So you've got your kind of exchanges, so they're mainly cryptocurrency exchanges, but we've seen kind of traditional exchanges also coming into the space. We've got kind of asset managers, so I think there's been a lot of reports around how many hedge funds have grown around the space and how many are coming into this space as well. Asset managers, so all forms of asset managers, whether they're kind of for university endowments. I think we saw like news on Yale having their own kind of crypto-focused endowment fund. And then we've also seen a lot of banks starting to kind of focus on this space. I know we've all independently had conversations with banks and what they're thinking around in this space. But those are some of the examples of institutions that we are seeing coming into the space.
Yeah, I think that it depends regionally as well, right? So to Linda's point, like the US, I would say, is probably 18 months to 24 months ahead of Europe, and Asia's probably somewhere slightly ahead of Europe, but behind the US when I speak to my colleagues globally in terms of what we see. But thinking back to 2012, it was really like when Bitcoin or cryptocurrency were just coming out of kind of this libertarian idea into the retail mainstream, so to call it. And in 2015, 2014 was kind of when Coinbase, we first started to see so-called institutions coming into the space. And that was, really a lot of market makers, proprietary trading firms, family offices. Fast forward now, call it 3 years later, and they're probably still the majority of our clients. I would say we're market makers and liquidity providers. And then right below that is kind of this new emerging asset managers or crypto-first hedge funds and VC funds, the Polychains of the world, et cetera. And then below that, we're starting to see emerging interest from your traditional macro hedge funds. I think that the long-only institutional investors and financial institutions are probably still a little bit further out in the spectrum.
I wanted to also ask you about just the Yale news this week. I mean, was that notable, or if somebody's really looking behind the scenes, was that, are there lots of other things that are actually more important and more notable than the Yale news, or what should we make of that kind of development?
Yeah, I mean, it's significant, right? It's an endowment which tends to be a bit more conservative in their investments. They definitely have a VC allocation. And I would say that, they're probably looking at a lot of the crypto investments they're making in the protocol layers, et cetera, kind of as a VC style investment. But what I think is more important is that it's not that they kind of just came into the space, but the reasons that allowed them to come into the space, and that's the building and the founding of the infrastructure. So things like custody, that's now saying, okay, even though we might have thought that this was interesting, academically, because, we're a thought-leading institution globally, we can actually now do it in a way that's compliant for our endowment. We know that our assets are safely secured, and we don't have to worry about that risk, and the infrastructure is starting to improve to allow us to participate in the asset class.
Got it. Well, and Katsu, I wanted to ask you about kind of the climate or the framework in Japan. Is that, when we're talking about the large players, are we talking about mining firms? Are they the kind of large, or, are they the whales? Or, who are the notable players that are, I guess what's growing and how's that changing?
So in Japan, becoming embracing the mining players like GMO is entering into the mining space, and also the DNM, SBI. These are guys are the traditional financial guys, right? Which are representing around 30% of the FX, and so they are now entering into the crypto space now. And so those guys are now also very aggressively seeing the future of the crypto, and sort of. In that sense, in Japan, typically, Japan is the first country which has a nationwide regulation for the cryptocurrency. So it is easy for institutions to enter into the crypto space. And also the traditional financial institutions like Mitsubishi, and so Mitsubishi is now trying to create a crypto custody service for the Japan market. So yeah, so we are now aggressively talking with Mitsubishi, and we hope to be the first exchange to offer the crypto true crypto custody service for the Japan market.
And is that notable to you? I mean, do you think that that's going to open up the conversations that you're able to have with other counterparties, or what is that? What does Mitsubishi's entry mean? What is Mitsubishi's entry if they do indeed begin offering custody? What does that help you do that you cannot do now?
So the cryptocurrency is in Japan. There are two big happening in this year. The first is the Coincheck in January, and recently the dive that happened in the last month. So in Japan, so the cryptocurrency is very skeptical. So we are now losing the trust from the market, right? So Mitsubishi is one of the largest banking financial institutions in the world as well. So if they come to the crypto space, they can bring the trust to the market. So with leveraging the trust from the Mitsubishi, so that we can grow our business. So that is a good mix. And also the Mitsubishi, so the other large institutional, so that it is too difficult to provide a new kind of the fintech type of services because they are too big, right? So because their company approval speed is very slow, and so to do the new business is very difficult for them. So that is good for them as well to partner with us to enter into the new fintech world.
Well, I wanted to ask Linda the same question. What are the custody options now in the UK, or how is that changing? How's that custody situation changing here?
Yeah, so we actually did, I think a few weeks ago, an analysis on the space internally for our own custody solution. So we custody all of our collateral assets, or at least we want to. And we did an analysis of about 14 market-ready solutions, not just in the UK but across the world. We found a number of them, based out in the UK, Switzerland, the US. Those are the kind of where the main providers are based. And I think there are a lot of constraints, right? These custody providers have seen the demand for custody in the space. I think earlier this year, everyone was talking about how custody would speed up institutional adoption. And I feel like it's a little bit ironic given that, Bitcoin being this mechanism for decentralized trust, the only way to keep it secure is to lock it up in a vault in Switzerland in a mountain. So I think, that's really ironic about the situation. But for example, everything we analyzed around these providers was about how quickly, easily, and securely can we store it and access it. And I think, none of these solutions offer a perfect way in or out. So a lot of manual processes. I think they purposely built it for the manual process in order to make it more secure. There's lack of APIs. It's very costly to get things in and out and to store basically just like data, right? There isn't really a scale to that, right? And then just where it's based, and there's a lot of clients of ours are jurisdictionally focused, so based around their regulation, they have requirements to keep their assets based regionally or wherever they're based. So it's also mandated by their firms where they can keep assets.
Well, and Drew, before the panel, we were talking about this a little bit, and you mentioned that this comes up at a lot of conferences. Is this an overhyped issue? How do you look at this?
Yeah, it's funny because 10 years in the financial services sector, I've never talked about custody so much in my life. Custody is like an afterthought. It's boring. It's a commodity. It's something that you just do, right? But it's weird. In crypto land, it's become this box ticking exercise that I go into a meeting and everyone's like, "You guys offer custody?" And yeah, we launched our custody product back in June. And in terms of like security or anything else, we can dive into that later. But it's almost like institutional investors with crypto, they're just going through a checklist of questions that they have to tick boxes to get their LPs comfortable. Which I understand because it's a new asset class. But what I think is more interesting is how the custody product is going to evolve over time. And to like Linda's point earlier, right now there's trade-offs between security and speed, right? So a lot of it is cold storage. There's kind of really no kind of perfect hot wallet or warm wallet, whatever you want to call it, option out there now to get liquidity faster the way that institutions are used to it. But where I think that things get interesting from a crypto custody perspective is when we turn the conversation away from what's your SLAs to give me withdrawals, or what's the insurance policy you have, into things like how does your custody support proof of stake mechanisms, or what Linda's company is working on. How does your custody solution allow us to lend and borrow the assets that we have locked up and make a real return? Because once we can make returns as custodians by providing proof of stake and lending, borrowing, revenue sharing agreements with our clients, the cost of custody will come plummeting down.
Well, so does it make sense for custody to kind of mirror the traditional exchange world where you have the segmentation of duties? You have your State Streets, your JP Morgans, your Mitsubishis, and you have the exchanges on one side? Or is it different enough that maybe it doesn't have to look just like that? Are there reasons to say maybe the exchange should handle it? Or I don't know, how do you guys look at that? Is that a lesson that should be carried over? Or
I think it definitely should be segregated, just for the record. So I think that, like, again, coming from the traditional world, like custody and prime brokerage is kind of bundled together, right, in terms of the offering when you think about what institutional clients need. But when I think about like the three real barriers to institutional adoption of this asset class, I would list them as like, better trading venues, so aka exchanges, custody offerings, and then also prime brokerage services. So again, lend and borrow, margin finance, etc. And so one of the issues with trading venues is I think that we have to decouple custody from the exchange. So I do think that is massive. In terms of what does that look like kind of going farther out from just decoupling custody and the trading venue, is again delivering these ancillary prime brokerage services, which the institutional community really needs to be able to run the strategies that they need to run to generate alpha for their clients.
Linda, are there any other best practices like that, or like, for example, insurance, or just any other kind of elements that you're focused on in the custody conversation?
Yeah, so we really want to have insurance because the custody solution doesn't mean anything if your assets at the end of the day aren't insured. But hopefully, like insurance is kind of separated through the brokers and the underwriters, and the brokers selling insurance policies, the underwriters actually having to underwrite the risk. And at the moment, it's like so unclear. Even us as professionals, we don't really understand all of the risks associated with keeping things, in cold storage or keeping things secure. Then how can these underwriters, whose professional job isn't blockchain security or cyber security, to actually value the risk? And the problem is that insurance works on the law of large numbers. So they basically have to make sure that there's a lot of people signing up for an insurance and the risk of payout is small. But in actual case, in crypto, it's the other way around at the moment. There's very little people looking for insurance and the payout is huge. And that is the question that we are facing with insurance providers. I mean, there's only one real party that in the news that have gotten insurance, the same ones we're talking to. I think Gemini got insurance from Aon. So yeah, we're talking to the same parties, but the conversations we're having with the loss adjuster is that they don't really understand how much we need to be paid out, how they can verify the loss. So whether, it's a loss that you have incurred because you've lost your keys and you're claiming someone stole it, or actually someone stealing it, or also valuation. So if a loss, for example, hacking from Bitcoin was experienced, say, 6 months ago when Bitcoin was 20K, or like 15K, the real loss then carried forward to today, is that supposed to be calculated, adjusted to equivalent US dollar rate, because it's paid out in fiat? Is it supposed to be at 20K, or is it 6K? It's a little complex question.
Yeah, exactly. Well, and there's just not if you're talking about actuarial metrics and those kinds of things, there just isn't necessarily the history to do a lot of the estimations, I would imagine. Are there conversations in Japan about this insurance issue? Is this a topic of concern? Is it being addressed in some way?
Yes, so in Japan, many other exchanges are implementing the insurance service, but that is not to guarantee all the loss from the hacking and from the compromising the customer accounts. So it is because it is difficult for insurance company to take a huge risk around the cryptocurrency world, because the traditional insurance company cannot understand crypto, and so they cannot understand what is the best security practice, best practice for the security of the cold wallet and the crypto. So of course we are now talking with some insurance companies in Japan. Of course the insurance itself is very important, but for them, even now, we can I think that we can get the full guarantee of any hacking from the insurance.
Is that have customers pushed for this, or asked for it, or suggested that that's something that they want?
Yeah, for customers, it is it will be a good choice when the exchange makes some announcement. So we have an insurance for the customers outside. But in the true sense, the other exchanges do not have any full guaranteed insurance service in Japan. That is the reality.
Well, I wanted to move the conversation over a little bit to just talking about regulation in different jurisdictions. I thought perhaps we could start with the UK, maybe we could talk about Gibraltar as well. But I wanted to ask Drew, what is your sense of, are there any particular regulations that you're focused on right now in the UK, and I guess kind of the direction of travel? What is your sense of that?
Yeah, I mean, just not the UK for us, right? We're a global business, so we're constantly evaluating regulations across the globe. In the US, it's the SEC and FINRA, we're a registered broker-dealer due to an acquisition that we made over the summer. Here in the UK, we're e-money licensed, so we're falling under the jurisdiction of the FCA. So the Treasury came out kind of with their paper saying that they will start to look into cryptocurrencies, and we welcome that. We work a lot with the regulators in all the countries we operate in. We actually don't operate anywhere without a license. We just opened our Japan office a few weeks ago. We're applying for our FSA license. We won't be fully operational there until that's actually up and running. So I think that in terms of, from a European perspective, the ones that we're most keen on seeing develop would be, what the Treasury ends up saying here, as well as, what FINMA is saying in Switzerland, seeing them as one of the stronger all-insured bodies. There was a massive conference that was in Malta last week as well. They're starting to welcome asset managers as well as ICOs to list there and develop their framework as well. But for us, like I said, the two biggest markets probably we're focusing on is what FINMA will say in Switzerland and what the FCA and the Treasury say here in the UK.
And I wanted just about you mentioned the Treasury Committee. I think one of their recommendations, correct me if I'm wrong, I think one of their recommendations was that the FCA should be regulating crypto, and I think they suggested also just essentially almost onboarding, traditional regulation and just bringing that forward, and just, until perhaps another framework is developed, just just onboard that for crypto. Am I characterizing that right? And do you think that's a good idea?
Yeah, you are characterizing it correctly. Like, I do think it's a good idea, again, from speaking purely from the institutional space, right? So I want to keep separating that from the retail and kind of focus on the world that I spend most of my day and my time in. Is because, again, and you know, judging by my accent, I'm from America, right? So the SEC, FINRA, the FCA, they have kind of tried and proven frameworks that work for institutional capital and institutional investment. And I think until, you know, this space matures and grows up a bit, that those frameworks are probably the best. Again, I keep putting to Linda's company, when you say, okay, I'm a custodian, right? I'm a regulated custodian, and a qualified custodian in the US or a regulated depository in Europe, and I want to lend out my clients' assets so that someone can short the market. What does that mean, right? Like, what is the framework that you're going to apply to that? To say that, like, we're going to come up with a crypto framework overnight, I think is a bit naive. So I think that, you know, the startup culture is run fast and break things, and when you're also operating in a regulated space, you have to not just run fast and break things, but you have to run fast but kind of work within the boundaries that you're given and dialogue and engage with the regulators to kind of push and show how this asset class can grow and how it can be different. So that's the approach that we always take, is how can we actually actively engage with local regulators.
Well, I wanted to ask you about the money laundering because, as I understand it, it's been reported that, you know, Japan would like to take the lead on this particular issue. They'd like to take the lead, you know, globally on combating money laundering at, you know, crypto exchanges. And I just wondered, are you seeing that on the ground? Are you seeing their activity?
Yeah. So the Japan FSA is now asking every exchanges to do the same level of the AML procedures at the back. It is very difficult for the startup like crypto exchanges. But that is the reality. So we are now sort of increasing the number of employees of the compliance team and internal audit team and the AML risk team. So of course, the hiring is very important. Right? And also on top of that, our employees, so that we need proper governance framework. So that we have outside directors who have good experience in traditional financial market. But our board of directors is current advisor to Japan FSA. Also, he was the senior vice president at the Mitsubishi UFJ Financial Holdings, and now sort of CEO of INCJ. INCJ, the Japanese, Japan's sovereign wealth fund. For the cryptocurrency exchanges, so the AML and so the kind of the regulatory requirement are very important. But cryptocurrency exchange itself is mainly the startup companies. So that's why we need to borrow some kind of trust from the outside directors and hiring the many people who have a good experience in traditional.
And I'm conscious that we don't have a lot of time left, but I did want to go back to a couple things. I wanted to ask about, you know, self-regulation structures or the SRO structure, but before that, you know, one thing on the Treasury Committee report, I believe it was Nikki Morgan who chairs that committee, said, you know, the appropriate regulation could see the UK become a global center for this activity. And I just wondered, you know, if the panelists think of that. You know, has the ship sailed for Japan? Obviously, it's global. You look at things global, true. But you know, is there plenty of time for when so many jurisdictions, Switzerland, Malta, elsewhere, are competing for this business? Is there still plenty of scope for the UK to be a leader or even the leader?
Yeah, I think so. I think that when I look at the kind of the three regions, the U.S. I think they might be letting that ship sail, for better or for worse. But the SEC will do what the SEC wants to do, and I'm really encouraged by. I haven't been there myself, but yet since I started working, but my colleague just got back from a big road show throughout Asia, in Singapore, Seoul, Japan, Hong Kong, etc. He came back very kind of invigorated by what he's seen. I'm very inspired by what I see happening in Zug and also Zurich and Switzerland as a whole. And I think the UK has its place, right? It's one of the largest financial centers of the world. And I think that, you know, we're sitting here in the Barclays Rise FinTech Hub, right? That says a lot. You have like level 39 down in Canary Wharf. So I think that the UK understands it. I think that they get it. And I think that overall regulations and regulators in Europe have been a lot more benign than what their US counterparts have. So I absolutely think that, I would love to see London blossom as a crypto hub along with Switzerland, Japan, Singapore, and hopefully my homeland as well.
Is that your take as well, Linda?
Yeah, I think so.
And Katsu, I mean, do you think though that ultimately Japan is going to be the hub of the world, or do you think that Malta and other places in Switzerland and Zug are posing a risk to that? Are plenty to go around? Big enough pie?
So for Japan, in addition to the regulation required by Japan FSA, the self-regulated association is there is a self-regulatory association.
Is that the virtual currency exchange?
Yeah,
association?
So the Japan FSA cannot monitor everything about the system. So they need to give the authorization to the association.
Is the FSA open-minded about this? Are they optimistic about it? Or?
At this moment, the association need to follow what the Japan FSA seeks. And also for the AML, as I said, for the AML part of the association itself also require us to be the same level as banking, and because the direction by the Japan FSA, and also all the other majors like the ICOs and the customer protection type of things, also following about what the Japan FSA thinks about.
Got it. Well, and Drew, I wanted to ask you about self-regulatory structures in the UK, whether it's crypto UK. Have you had feedback from the FCA? Have you had feedback from regulators about their thoughts on that?
Yeah, I think that again, it's something that's welcomed. The head of our European operations, he was one of the founders of Crypto UK, which I think is up to 8 or so members. They're constantly reviewing applications for new members to join. And the thought process was like, okay, well, if the FCA or if the Treasury is going to come out and give us regulation overnight, let's set standards in terms of the way that we think we need to interact with our clients. And that's basically what it was. The founding 8 members, they said this is the code of conduct that we want to adhere to, and we see ourselves as kind of best-in-class players within the UK. And then, let's go out and start to engage with the regulators on an active basis, which they do, hosting teach-ins and kind of speaking sessions. And then also let's invite other crypto companies that are in the UK to also come and join us. So, that was kind of our take in terms of saying, like, let's go out there and kind of put our mark in the stand in terms of being transparent about the level in which we hold ourselves to. And we'll be announcing shortly that we're joining another SRO here in the UK as well, which is pretty exciting.
Well, Linda, I wanted to ask you if are there any lessons to learn from, existing SRO frameworks, whether that's peer-to-peer type associations or, maybe SROs in other jurisdictions?
Yeah, so I think the peer-to-peer lending SROs have done a good job, still have the kind of crowdfunding in the UK. And I think that took a lot of lobbying on laws over many years, in the same way that there weren't any laws that were applicable to them at that time. They have been able to get, as a group, get the regulators involved in their discussions, provide rules and guidance for them. But I think for crypto, given how broad this kind of space is, and how unregulated the space is, self-regulation is definitely a noble goal. And I see not only Crypto UK being represented here, but I think another SRO PDF represented as well. So just calling out, there are many frameworks currently in this space, but I think we have been given an opportunity already to self-regulate in this space, and it hasn't really worked. So I'm keen. I think the best practice is definitely to engage with regulators and discuss what your thoughts are, but ultimately, rules have to be set. There will be kind of new best practice methods for companies to follow that will foster more transparency in the space. So I'm keen to see those evolve.
Can you picture, I'm not sure if this exactly happens through the SRO framework, but for example, I get emails once a week from CME, and they talk about fines on their exchange and that kind of thing. They call out parties, and they're usually pretty small fines, and they're probably years after the infraction, but it is something. And could you picture something like that being brought over, like naming and shaming in that way, or do you think that that's going too far?
No, I like that. I think if companies themselves, be it exchanges, be it like platforms like ours, we have a process whereby if people don't follow the rules that we have assigned, which we have adopted a framework for securities lending in the traditional space, but kind of build our own bespoke crypto asset lending agreement. If people don't follow the rules of those terms, we will blacklist them, or initially we'll give them guidance, then we'll kind of suspend them on the account, and then following that we'll kick them out. And I think if companies can self-regulate in that way and show people what best practice is, and then guide, collaboratively the industry in ways which show, this is good behavior, this is bad behavior, then internally we can monitor ourselves to some extent, but also demonstrate that these principal guidelines of trying to be transparent and be safe and create a safe platform for other parties, be it retail or institutional, to trade with, then I think that will give confidence to regulators and consumers that this is a space worth watching, and this is a space worth investing and kind of building infrastructure on top of.
Andrew, could you see that being valuable? I mean, do you see maybe the Crypto UK framework or that SRO framework having some teeth like that, like having some kind of function to be able to find and name parties, or do you sort of see that as separate and maybe like the FCA keeps that capacity or something?
Yeah, I think that personally, like just my own point of view, not like necessarily a Coinbase point of view, is that that's probably should be kept separate, right? I think that SRO is kind of meant to again kind of set a code of conduct, but the fine should be left to the regulators in terms of letting them they have the resources to actually kind of dig in and do the right investigation. But I definitely welcome that regulation from the regulators, because there's there's no secret, there's a lot of bad actors out there, right? And that's what's again that's another hindrance for institutional investors to come to the space, right? Because there's concerns about is the liquidity that we're seeing on a lot of these exchanges real, right? How do we know it's actually there? So I think in terms of that, 100% welcome it.
Have you had any feedback so far on the code of conduct that's available now? Like, have regulators responded to it, or just clients or people you talk to? I was just wondering if you've had feedback on your code of conduct so far.
I personally have not had direct feedback, but I'm sure our GM who manages that relationship has. Yeah.
Well, I'm conscious that we're getting pretty close to being out of time, but I did want to put the panelists on the spot and ask for a forecast, not a price forecast, but I did want to ask, and perhaps I'll start with Drew. When you imagine things 1 year from now, are there, granted, predictions are always dangerous, but is there anything you have some certainty around, like things that you really think are probably going to happen in the next year, whether it's an institutional development or a regulatory development? Is there anything you have some certainty around?
Around the record or no? Look, I think that we'll all still be sitting here in 1 year, right? I think that that's a good thing. I think that this audience will be bigger than what it is in 1 year. We'll have more people interested in the space. I think that in terms of regulation, I think that, again, in the US, we'll probably see more come out in terms of fines, and the SEC actually taking some of the actions they took a couple of weeks ago. I think that the FCA probably has their hands full in the next 12 to 18 months with Brexit and figuring that out first before they kind of start to take a deeper look at crypto. But I think that there'll be more institutional involvement. Despite the price action that we've seen for the last few months now, the demand, the conversations that I've had haven't decreased. They've only kind of grown. People are starting to properly look at the space. 12 months ago, the conversation that I had when I walked into offices was like, what is Bitcoin or what is cryptocurrency? And now it's like, how do I run a relative value strategy given the tools that are in place today? So I'm super bullish on the space overall, and definitely from institutional participation.
Linda, any forecasts or anything you have certainty or relative certainty around for the next year?
Yeah, so I can't be here without kind of trying to talk about lending and borrowing. So we think lending and borrowing is going to be a huge thing in the next year or so. I mean, it follows the kind of exchange, and then you have lending and borrowing services as a kind of secondary market for where these loans of these assets should and can be traded. So I think we'll see a lot more kind of services, including ourselves, coming into the market and trying to fit solutions to basically the demand from institutions to be able to not only trade loans on these assets, but also basically take or make loans on these assets, but also be able to trade it, which is kind of what we offer. But again, another big thing I think has been the talk of town is security token offerings. So that kind of has replaced ICOs in the minds. I think it's the kind of wave of how can the space be more regulated, how can ICOs be more regulated, has kind of started this new kind of potential wave of SDOs. And I think there's still a big question to be addressed about whether liquidity in early stage startups is a good thing. So I think there's a lot of analysis around, the interest, like the distraction that might offer to these companies, and that early liquidity basically forces value extraction from these companies. And it remains to be seen whether distraction that offers actually results in companies being created for good rather than kind of for short-termist, basically short-term venture capital.
Well, and before we see if there are questions or open it up to questions, Katsu, what are your thoughts for the next year?
Yeah, hopefully the price will be going up and up. And our cash token will be the one of the top 5 currencies, but putting aside that. So as Linda mentioned, so the security token will be the future in the crypto space. And I think the cryptocurrency, the definition will be divided into the 3 categories. One is the pure cryptocurrency like Bitcoin, Ethereum, and second one is the utility token like our cash token, and third one is the security token. And as Linda mentioned, so the ICO's future it will be the SDO, and when the SDO comes into the crypto space, we need to apply to comply with the regulation in an existing security market. In the next years, still complying with the